Hey everybody, happy Friday, September 6th. This is Rick Mount with Fairway Independent Mortgage here in California. Wanted to bring you this week's market update. There's a lot going on out there. I can't believe we're already through Labor Day, back to school, and most importantly, football has started. So not sure if you caught the performance out there, but 7 touchdowns by Mr. Peyton Manning with the Denver Broncos was an impressive way to start the season. So I'm looking forward to football. I'm a big fan, but let's talk about more important stuff such as what the market's doing. So right now there's a lot of people out there that think the mortgage-backed securities are in a slump, and you know what? I'd have to agree. Mortgage interest rates, as reported by Freddie Mac, have pushed up to over 4.5% recently, based on some of the sell-offs or the poor trading of the mortgage-backed securities. That's back up to a high of 2-year high that we've seen, and up from almost a record low of 3.35% as recorded in early May. That's a significant increase. So to put that in perspective, that's a 35% increase in a little over 17 weeks. That's the fastest increase in comparable period since 1972. So significant uptick, but nothing to panic about. Obviously, rates have been artificially low, and 3.35 was extremely low. So keep that in mind. But we are definitely creeping up in there. It's creating a lot of volatility out there with things such as Syria and the crisis and how we're going to deal with that as a country. Tough to get away from it in the news, but when there's uncertainty in the world, both locally and globally, it creates an environment where a lot of big trading investors will move money into what they call safe haven investments. Mortgage-backed securities and treasury notes are considered those. So when you have uncertainty out there, sometimes we get some rebound back from that because people will trade money into those investments, and that'll help rates go down. But the biggest issue still out there is the government and their tapering of spending, so we'll keep a close eye on that for you. But unemployment rate back in the news. Unemployment has dropped again, but don't be fooled. That unemployment rate is sort of an arbitrary number as the way it's measured. But unemployment's not dropping because we're creating that many more jobs in the economy. In fact, the unemployment rate is dropping because fewer people are participating and continuing to look for a job. So think about that for a second. That just means they don't have a job and they've stopped looking. So unemployment rate is dropping because of the participation rate. But the payroll jobs came in a little disappointing today from what they were hoping, around 169,000 jobs. For a healthy economy, we got to be north of 250,000 jobs created, and we're not getting that. So we'll keep a close eye on that. Obviously, that combined with the Syria things, we're getting a little bit of rebound in rates today after a pretty significant punch in the gut yesterday. So again, lots of volatility out there. We'll keep an eye on it. Another thing that we need to pay attention to, especially in the housing news here in California, is Senate Bill 30. Senate Bill 30 was the related to short sales and a borrower who performs or goes through a short sale and being exempt from taxation on the forgiven debt. That is in the Appropriations Committee, and if it does not get passed, then people that perform a short sale could get a 1099 for the losses and then be responsible for the taxes. So big deal to keep an eye on, and short sales has been a big part of helping the market continue to move, as it's become a pretty viable option for a lot of underwater and struggling homeowners out there in a way to help get their financial ship back in order. So we'll keep an eye on that as we get there. Lots of news. More importantly, I think it's lots of noise. I think really if you sit down and take a look at it, the media, they like to create sensationalism out there and get you to buy into different stuff. But in the reality, if we step back and look, we got 30-year fixed interest rates in the mid to high 4s, depending on where you're at in the FICO score. Housing prices in most of California still off of their peaks and still relatively good values, being about 15% below their peak value before the credit crisis happened. So what does that mean? Well, things are still affordable. Homes are as affordable as they've been in many years, and still more affordable than most periods measured. So it's still a great time in the housing market, and we hope that our policies in the economy keep it that way. Housing is a big part of the recovery and continued growth for our country, so we're keeping a close eye on that. If we can help you or anybody you know with their housing situation, whether it's a refinance, a new purchase, pre-approval, or wanting to help them get into their forever home, we're here to help. Give us a shout. Have a great weekend. Be safe. We'll talk to you next week.